Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Hope everyone is doing well. Had a bank holiday yesterday, so we're getting our week started off today. Now, of course, there are markets clearly that are open on bank holidays, but think about how much less participation, much less volume, how much less attention those markets are getting. So that's why I say whenever there is a bank holiday, yeah, there are things that are moving and grooving, and yeah, there are financial centers that are open, but it's not full participation. So it's a different view. Incomplete. Won't say right or wrong, but definitely an incomplete view. All right. So as we kick off the morning, you'll notice I've got two charts on the screen here today. The sliver of a chart to the right is a weekly time frame, and I've been keeping a pretty close eye on that really long-term time frame. I know we can talk a lot about day trading, and we can talk a lot about short-term setups, but a lot of times what happens at the sacrifice of that attention going to short-term things, what can we do today, etc. At the end of the day, sometimes the longer term is where the opportunity is. And very interesting to see that even with all the chaos that we saw since the 18th of December, based on a disappointing reaction or reaction of disappointment to the messaging from Jerome Powell, that chop that's lasted at this point basically 1 month, right? 1 calendar month, really didn't do much more than trigger a mean reversion on the daily. So a lot of times it's not a matter of what symbol are we looking at. A lot of times it's also what time frame are we looking at. It's as important as the symbol itself. So staying locked in to a particular strategy, day trading, staying locked into a particular symbol, whatever it may be of the S&P here, that's not going to serve us as traders. Case in point, a lot of symbols are on their own journey right now. Even though the Dow triggered the same kind of mean reversion on the weekly, it's been a far more bearish daily time frame. In fact, one up until today was a downtrend since, as you can see here, the 6th of January. So let me show you how I read this here. And this is the top tier multi-structure. And what this allows me to look at is the way in which the price action and the participation are giving me insight into momentum, which is a kind of a short-term psychology versus the trend. Now, if you think about momentum and trend, it's really three things. What are people thinking? That could be, sentiment. Therefore, what are they going to do, right? And if they keep doing it, you end up with a trend, right? So you think it, you do it, and then the consistency of that action over time, that loop of sentiment to momentum eventually equals a trend. And at this point, that sentiment went neutral on the 15th. This is the Dow, by the way. Kind of struggled a little bit on the 16th, went back to neutral on the 17th. But do you see the distinct shift? The same way we came out of the strength, green to yellow to red, we came out of the weakness, red to yellow to green. Now, not everything was as heavy as, say, the Dow or the Russell was. You can see here's the NASDAQ. It did not organize into a trend because the sentiment and momentum didn't persist long enough at lower lows and lower highs to drag that trend. But you can still see the warning signs. Green, 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 yellow. Okay, we're just going to keep with a bullish approach, but far more cautiously, a little bit more about a overbought, oversold conversation than a trend conversation. And then as you can see here, it's the same day everyone started dealing with the weakness. By the middle of December, things started to get a little heavier, but they never succumbed to the trend that was down, unlike the Dow and Russell. So this is another thing where, again, we never want to paint the entire market, the three major indices, four if you want to include the Russell, Dow, S&P, NASDAQ, Russell. You never want to paint them with the same brush because they are different. They're unique. I would never want to minimize the uniqueness of what the Russell is with what the uniqueness of the Dow or the S&P or the Nas is. They're all made differently, right? They all have a different construction, whether that be the sector weighting or the stock weighting. All right, so let's get to it. Taking a look at the NASDAQ, things are up. We are looking at some strength right now. I am not a bear, gang. I mean, I guess it's at this point maybe a little, I won't say laughable, but yeah, Rod, what's it take for you to get bearish? It takes a whole lot more than just basically 5-6 days of a downtrend when the previous 12 months were as bullish as they were. It takes a whole lot more than a wobble in the monetary policy messaging for me to change my mind about whether or not I want to be bullish, right? That's a wobble of a handful of days. And the speed at which traders are willing to change their mind, especially going bearish, is hilarious. It really is. If we want to be that nimble, right, do it short term, 5-minute, 1 hour, day trading, short term swing trading. But it takes a whole lot more to wobble an end of day or daily time frame. It takes a whole heck of a lot more to wobble a weekly, where we get one candle a week. And you'll notice, again, weekly mean reversions. When people say, oh, what does buy the dip look like for my portfolio? That's what it looks like. It looks like that weekly time frame. And it doesn't always feel good. Remember, the messaging around dips is never going to be positive, right? Unlike Prime Day, right, on Amazon, we go, oh yeah, here comes a sale, or Black Friday or whatever, right? We always get excited about that. But yet, no one gets excited about sales on Wall Street. And that's just one of the strange realities of trading and investing. Now, we love sales in just about every other part of our life, but we run from them. In fact, we like to return our stuff at the lower price during a sale. Go figure. All right, crude oil. Crude's had a pretty interesting journey. You know, obviously a lot of this is going to be geopolitical and political. However, right, remember, all the things we don't know will always outnumber, let's just assume conservatively, 2-to-1, the things we do know, right? So let's always presume, and I've always done this for 30 some odd years, the things I don't know about why a price is doing something, why a stock is doing something, whatever, the things that I don't know are far going to outnumber 2-to-1 things that I don't. However, there's 4 things I can rely on. There's 4 things you and I can rely on that will do the best at leveling the playing field for us all. Price, yeah, most people stop and start with price, which is great. They have price-based tools, price-based indicators, open, high, low, close. There's only so many ways you can slice that and not end up with a pretty similar answer. So price is obviously important, but it's frankly incomplete. It's living in a one-dimensional, very flat world. Okay, let me get on volume. That's a really popular addition to understanding how many people actually care, right? How many people actually care about the volume at a certain price? That matters more than price alone. So price plus volume. Now, volume could be anchored VWAP. Volume can be volume profile. But how many shares, how many contracts were traded at a specific price, right? Okay. Next goes to, all right, a lot of folks will get to that second step. And now it's a 2-dimensional world. The next step is, and it's really up to you, I think a very common next step is time. So traders start to look at tendencies. Maybe it's Pitbull lows, OpX, which is often called ChopX. It might be end of month rebalancing. It might be even, I would put seasonals in a time-based understanding of certain rhythms, right? Not certainties, tendencies of the market behaviors. You got price, you got volume, and then you start getting this rhythm or time. It could be intraday, like a day trading clock. It could be the monthly cycle of a stock based on OpX and Pitbull lows and end of month redemptions. It could be a quarterly rhythm of those things. And then the fourth is volatility, right? And the fourth thing being volatility means every stock has a sort of zone it tends to trade in. Every futures contract does, every sector does, every index does. There's a typical amount of points that most symbols trade in almost almost every day. And a lot of folks are not aware of that because they've never measured it. So if you take something that happens, let's say 68% of the time, 68 of 100 times, you say, wow, this particular market, could be crude oil, could be Google, doesn't matter, usually trades this number of points. What an advantage you have to where exhaustion may be to the up and the downside. So that's how you live in a four-dimensional trading world. And if you're thinking, Rod, I might be living 1 or 2D, I'm living in kind of a flat trading world as I'm getting started with 2025. Come check out what we're doing in the Sector Secrets Mastery. We live in 4D, right? We live in 4D because there are 4 dimensions that we can measure as traders. Again, I'm not chasing news. I'm not going to presume I'm going to know every little bit of what's going on. But all those things that I don't know leave clues, and they leave clues in the price, the volume, the time, and the volatility. So those are things you can think about saying, hey, how do I get an edge as a retail trader, right? How do I get an edge as someone who's, not on a trading floor, not, and notice the things that I did not say. No dark pools, don't care. Pools of darkness, not my thing. In fact, you have a dark pool in Florida, something's really wrong. You don't go swimming there. I'm not going to look at things like that. I'm not going to worry about what insiders are doing. Cool thing to look at, but you're probably going to see certain price action already, certain volume already happening in a stock. So believe me, all those other things that we're often told to worry about, they're going to be in those 4, right? Those 4 dimensions, right? Now, if you want to add those kind of things to the 4 dimensions, great, because now it'll confirm. You'll have this great loop of why that might be working right now, why that bullishness in an uptrend might be worth focusing on, things like that. All right, so that's kind of where we are right now as we kick off. Really, we can call this the beginning of the year. I mean, I don't know about you, but it's felt since Jerome Powell kind of swept out the knee, Karate Kid style, it's kind of felt like we're waiting on something. We're waiting. We want some clarity, whether that be monetary policy messaging. We want some clarity in terms of, things like crude oil or things like bonds or the dollar, the broader averages. What is it that we might see as far as trends? And I'd say most of that waiting is probably over. CPI was a big part of that, right? CPI was a really big part of that. So ultimately, when I look at CPI and the fact that it was flat to slightly cooler, that keeps the pressure on the Federal Reserve to cut at least once more or maybe twice by the end of the year. And that is actually priced into the Fed Fund futures. This is not speculation. We can see it play out in a futures contract whose sole job it is to speculate on what the monetary policy end result, cut, hike, hold, is likely to be. So that's priced in. Tough to be a bear when we're still dealing with, I know it's easy to forget, right, based on Powell's words on the 18th, but we are still dealing with an accommodative Federal Reserve, at least for now. All right, so then let's see what we've got here. So if I'm looking at the S&P here this morning, remember, if I look under the hood of the S&P, and I think I saw a question about financials. Sure, let's jump on in there. Financials, earnings. Now remember, amidst all of this, we've been going through earnings season and the very beginning of it as the financials earnings are released. And you can see financials definitely gave earnings season definitely give financials a kickstart. Look at the chart to the right. Did the weekly wobble even a little bit? So if someone's out there saying, oh, it's time for a crash, it's time for some crazy pullback, I don't see it in those 4 factors. And if they're not in the 4 factors, gang, this is just someone talking to do one of 2 things. Talk their book, which is what every hedge fund does when they're given a 20-minute infomercial on television, or 2, they just want to get your attention. And usually attention is fear. So, oh my gosh, let's say we're looking at the S&P, how would I get your attention? Would I get your attention by saying, hey, this is chop. It's not time to be bearish. Let's be patient. Let's wait for an oversold buy. Would that get your attention? Or would some clown out there going, hey, we're going to 5,000 get your attention? Which gets your attention because you probably see it all the time. It's that person who's going to say, we're going to 5,000 on the S&P for reasons that they can't really say, right? For reasons that usually make no sense. But those are the things that you're going to have to deal with right now. Okay. Trade what you see, not what you think. 90% of what's out there is what people think, or they're trying to get your attention. If I don't have something to do in a particular symbol, like S&P right now, on a daily time frame of the S&P, I'm not really all that interested. On a weekly time frame, that's a buy the dip. On an hourly time frame, I could look at a short-term swing. If we move down to about 6,007, I'll look to buy something like that. I know there's resistance at about where we are right now. You can see it all day. We've been at a resistance level. Okay, maybe a short-term swing is not what I'm going to do. Perhaps then I'll focus on a 5-minute time frame and I'll day trade this likely to the upside on a dip, right? We're trading above the previous session close. We've got the hourly price movement range volatility support below us, and we've got an uptrend, right? So these are the kind of things that I'll say, look, can I trade the S&P? Yes. Which time frame now is lending itself to the best psychological clarity? That's where the momentum is going to persist. That's the trends are going to be. And if you don't have one, look at the next thing, right? Look at something else. It could be the NASDAQ. It could be the Russell. It could be an individual sector. It could be an individual stock, right? Those are things that are going to be really important this year, gang, because we're at the tail end of the monetary policy hopium, which was what we saw the first 9 months of last year, the anticipation. Sometimes the getting is actually more bullish than the having when it comes to rate cuts. That anticipation of the rate cut kept so much of that optimism going. Now that we got the darn things, notice it hasn't been as, in terms of the scale of the move, as much. Yeah, we're still hitting all-time highs, but not with the frequency and not the distance from low to high that we were seeing the first 9 months of the year. So oftentimes the getting is more important than the having. And we're at the end of that. We're at the end of that cycle. So now equity markets have to stand up on their own. There has to be a reason where, aside from Jerome's going to cut rates, right? Aside from an accommodative monetary policy tact, there's got to be another reason. And again, if that reason does happen, by the time we hear about it on the news, it's going to be old news, right? Really old. It's already been priced in. It's already been reacted to. But if we're watching the 4 factors, price, volume, time, volatility, we'll catch it a whole lot sooner. And that's our job. That's our job as traders, right? Trade what we see, not what we think. All right. So with that being said, let's see what we have here. You know, a lot of questions about things like, we looked at crude oil. Yeah, V, we looked at crude oil. And a lot of things like energy and crude. I'm gonna sit on the sidelines a little bit longer. It's looking a lot more clear as far as what the tact could be going forward. And I'm not an energy bear. Crude oil is above the equator. It's printing green candles. XLE, the energy SPDR ETF, is also green candles. And the question here was specifically about Occidental. Occidental is probably the most bullish, probably followed by Williams, to be in a bullish environment. Williams just picked up Carlos Sainz. So my F1 fans out there, whenever I pull up Williams, yeah, they just they signed Carlos Sainz in the not technically not the off season. I mean, everyone knew he was going before the season was over. But anyway, is it F1 season yet? All right. So Occidental, I would say, would be pretty darn bullish, and so would Williams. Those are going to be the leaders within the XLE at the moment. XLE is definitely making a good argument for buying it on a dip, but a lot of this is going to hinge on what happens here. Crude oil next, so keep an eye on that. All right. So with that being said, gang, I'm going to go ahead and wrap it up. I'm going to head on over into the Sector Secrets Mastery Room. By the way, we're going to be having a webinar on the 5th. So a lot of the things I'm talking about here, and a lot of the things that I'm talking about, the 4 dimensions, right? Trading in 4D, not flat in one dimension, price only. You know, how do we grow accounts in this environment? It's going to be very different than last year. Very different, because the underlying monetary policy, which, by the way, gang, I know there's a lot of discussion about 19 other things. Notice I haven't talked about any of them. You know why? Because I'm here to make money, and I'm here to share with you what it is I do to make money. And that is find opportunity, preferably a trend, and manage risk. The rest of it, all the rest of it, is going to be in price and in volume and in time and in volatility, right? So with that, knowing we're going to get bombarded by a lot of different news pieces, keep your head about you, right? I will say that ultimately we're seeing a little bit more optimism coming in based on what we've been seeing for a couple of days here, right? Things have been moving higher, but today we're getting that green candle back. we haven't gone into a downtrend on the S&P. It's a choppy range. So if you're having challenges with this, on the 5th and on the 12th of next month, which is right around the corner, I'm going to be walking you through not only what we did in 2024, but how it is I'm already starting to trade in 2025. And that's going to lead into our immersion, which is coming up next month, starting on the, I forgot what day it is, but we have our immersion coming up by mid-month next month. I'm still trying to get through January. So immersion starts on the 12th, 13th, maybe the 18th. It's coming up. All right. I'll have some sign-up links for the webinar for you this week. So stay tuned for that. But the 5th and the 12th, pencil that in, and I'll see you tomorrow. Same time, same station.